What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. Today I have double trouble. I got Nilima and Prateek. How are you doing, guys?
Good. How are you doing?
I'm fantastic, and I got some great news for you guys. Today, I'm actually joined by my very favorite member of the audience. And why is my favorite member of the audience here? Is because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, all that sort of thing. And you may ask yourself, why would you do that? Well, the answer is, if you've ever heard of an off-market deal or a private deal or a 506B syndication, then you might know that the SEC requires that you have documentation of your prior substantive relationship, or else they'll get ants in their pants, and you don't want that. So I make sure that anybody who's in my circle who is a potential investor or a syndicator I might cooperate with down the road, I make sure that I have them on here and we find out their level of sophistication, appetite for risk, core competencies, and all that kind of fun stuff. The benefits to you are that you learn to effectively communicate on the subject of commercial real estate, and you'll know how my guest fits into these deals. But before we get too excited with that, Nilima, Prateek, I don't know who wants to go first, but do you want to say some things about yourself before we start talking about your businesses?
Yeah, absolutely. So my name is Nilima Maharjan.
I'm Prateek Sharma.
We're actually in Portland, Oregon, and our company name is Trevay Capital.
So we are multifamily investors, syndicators, and we actually invest in real estate, multifamily real estate, as well as we help others invest in multifamily real estate passively.
Yeah. So that they don't have to just be a landlord. We actually take care of everything.
Excellent, excellent. And you're both Nepalese. You're from Nepal, right?
Yeah.
Yes, that's correct.
We're both from Nepal.
Excellent. That's really exciting. But the first segment that I always do on here is the 5 distinct motivations. I guess before we get to that, I've got to do one other thing. Prateek, I don't know if you can see through the camera and into the user's device, but down here there might be this hideous subscribe button, and I think that they should, do something about that. Okay, it's a stupid joke. Anyway.
No. Yeah, they definitely need to do that.
Well, yeah, exactly. It's free after all. But I've spoken to literally hundreds of different investors, syndicators, and whatnot, and everybody has their own unique reason for why they are doing these acquisitions. But it's important for different investors, syndicators, to know what that reason is, because after all, it takes months to even close one of these deals. It takes years for them to go full cycle. And so you really need to know what's going to keep somebody really going and motivated to keep with this project. And I found that even though everybody has their unique why, I found that they fit pretty neatly into these 5 different categories. They are, the first one, preservation of purchasing power. What on earth is that? Well, some people don't have to have a job because the way they make ends meet is from the proceeds of ownership. So in other words, they've got a portfolio of assets, and then those profits are how they pay their bills. Now, if you're in that situation, why on earth would you go through the hassle of another acquisition? Well, there's a couple different circumstances. One of them is if inflation rears its ugly head, then it's going to eat away from the purchasing power of your cash flow, so it's going to be time to make a new acquisition. The other time is when there is distress or an asset crash, so you can pick up the asset at a steep discount. So those are the motivations for people in that situation. I'm not there yet. Where I am is I'm trading time directly for wealth. And the reason for that is because I came from tech. And in tech, when you're a high wage earner, high salary earner, you pay more tax than anybody. And that was never more obvious than when I was working for a guy in Ohio who was flipping 10 houses a month. He was doing 10 different single family transactions every single month like clockwork for years before I started working for him. But I found out that's actually a way to pay way less in tax and earn way more when it comes to equity multiples and, those sorts of liquidity events. So that's why I decided, how can I pivot to where I'm getting rewarded in the form of deployed capital, aka equity, instead of high salary, high wage. But that's a little bit too subtle for some people, especially youngsters. But what they tend to be more interested in is taking over their schedule. And that might mean that they're trying to hustle like crazy right now and then fast track their retirement. But it might even just mean that they just want to work fewer months per year or fewer weeks per month or something like that. Regardless, it means that they're doing this to eventually scale down, tone it down, gear down a little bit. And that's completely unlike this fourth group that I have. They're just plain ambitious. They want to buy their entire hometown. They're after that generational wealth because they want to make sure that their great-grandchildren never have to hold a day job. And that's pretty amazing because it means they're going to keep on hustling into their 90s, which is great to have on any team. The last group, they're also similarly motivated in the sense that it's not going to run out anytime soon, but the focus is different. This last group, they've picked a sector of society, or maybe it's animals, maybe it's the environment, who knows, but they figured out that there's a financial component to making a really big impact in society or whatever it is you're going to do, and that's why they're making their commercial real estate acquisitions. So Nilima, Prateek, as far as those 5 different motivations, I'm sure that there's some sort of combination of those you'd say describes you best. Let's hear it.
Sure.
Yes. Taking my notes. You go ahead.
Dan, we're both immigrants. We actually came here from Nepal. Mm-hmm. And, there's this American dream, right? Mm-hmm. And I think when we actually hear a lot of American dream, the American dream is actually making that 6-figure income and, working till you're 65, and in around 65, you actually buy RV and you actually do a tour of 50 states, right? Is that really American dream? I don't know. I don't think that is for us. I think our American dream is, it's only 2 of us currently. And, once we have a family, we want to be able to spend that quality time. We want to travel the world. We have families all over the world. And we just want to have that freedom of time to just be able to do whatever we want to do, as well as from wherever we are. I mean, if we're going to do something with real estate, I think it really gives us a better chance in doing that than doing a 9 to 5 and, just hustling, right? Mm-hmm. So I think that is our bigger why, and also to be able to support our family.
Yeah.
That I think that pushes us every single day as to even when I think when we started our first business with Amazon, our goal was to whatever we make from that, we're going to put the rest in our business, and then we're going to support our family a little bit with that, so that we actually, because they don't have any other form of support.
Yeah. Mm-hmm. Mm-hmm. Yeah, I totally agree. I think because our goal and our dream is the same. And then just to go back to that 5 points, kind of a combination of, I would say 3, 4, and 5. Mm-hmm. So that would be early retirement and just the time freedom in general that we want to have, so that we'll have time to just do what we love, especially also have time to just go see our family, because we have family all over the world. The 4 was generational wealth. I think that's definitely what we want to have. And the last one is help people. I think when we started this journey, we were just kind of thinking about, oh, we can actually do this for us, have a time freedom, financial freedom, help our family. But then as we get along with the community and stuff, we've always wanted to just give back, but we didn't know how and when. And I feel like real estate has given us that platform to think oh, this is actually we can actually do this, and then help other people, kind of educate it. And as well as, because for us, the biggest thing is he's been in food industry, and then his big,
the way of giving back is I've always been more about, feeding people, and we live in Portland, Oregon.
Right.
And sometimes it makes me really sad, and especially with this weather. Like,
Yeah.
we recently had snow, and I really want to be able to provide them that way too.
So we try to do that as much as we can. Even when we go back home, we actually do like donate and then try to feed like homeless people. And then the other thing that I'm very passionate about is like education in general. And then that's something that I've always wanted to like do something back home and then maybe like help with the school system or like provide like employment opportunity. But that was just like an idea and vision that I wanted to do. But I didn't really know how to do that, but I feel
Right.
like now I'm having like that clear vision of like, okay, real estate is a thing. I can educate people and I can also like try to do like some kind of give back. Um,
Yep, I love that answer. And me, I was lucky enough to start working from home in the CRM agency before I had my first kid. And honestly, it's the investment that everybody really needs to make is in their own children. Making sure that they learn the things that you've learned in your life. I know a lot of people, especially the wealthier they get, the less qualified they feel they are to do that, and also the less inclined they are to do that. But like that's a recipe for making another generation of people that aren't so great to be around. So I really love that. I think it's super important that people spend time with their family. But the next question I have, it has to do with risk assessment. And if you've ever been involved in a 506B deal, whoever the securities attorney in the mix was, then there really should have been a securities attorney involved in this. They should have insisted that every limited partner, everybody involved, every investor fills out this questionnaire. It's super invasive financial questions, and it's the laws. The SEC is going to require that you have it filled out and you can give it to them on demand. But there was one question when I was going through that questionnaire that I thought it didn't really serve the purpose that I think is necessary, which is to figure out, it's like, does this person understand what these investments entail? So I've made my own version, which is a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. So, guys, it can be inside real estate, it can be outside real estate. What's too risky for you guys?
I would say crypto.
Yeah,
Crypto? Mm-hmm. Okay.
I think it is very volatile, and
Yeah.
like you are actually betting against a thing that you actually do not see, right?
Yeah. Yeah.
Whereas real estate is something you're investing in a property, but I don't know where the Bitcoin is.
Yeah. I mean, I've seen people who have made fortune
Absolutely.
investing in crypto, but then I've also seen people who have lost everything
Mm-hmm.
investing in crypto.
Yep.
So it's like, oh,
Yeah, yeah, absolutely, absolutely. It's an appreciation thing. Buy low, sell high, and it doesn't make any money for owning it. So there's plenty of risk involved. But that brings us to some math. It's kind of a boring thing, I know, but I know that some syndicators, they focus on working with people, getting them excited, and then they say, "Oh, numbers, you need to talk to my underwriter." But everybody should have to vet their deals, and the way that everybody's going to do that is a little bit different. But I've got 12 different metrics on here, and I'd like you to say some of the ones that really move the needle for your decision to pursue underwriting it and whatnot. And the idea being is that if there are people in the audience who have a deal, then they know what to start with when they're letting you know. And just in case anybody out there is not actually watching, they're only listening, I'm going to read out each of the metrics on my list. The first one is cash on cash, then it's IRR, cost per door, net operating income, or NOI. Next is the going in cap rate. Next is the loan interest rate. Okay, that's particularly important because we had a big interest rate hike a couple of years ago now. And then average income in the area where the property is located, amortization period of the loan, market versus in-place rents, as far as like what's the differential between them. Next one is population growth in the area where the property is located. Then sponsor record in terms of how many deals have gone full cycle, how long have they been around. And the last one is the waterfall or the split. In other words, what percent do LPs get, and do they get to stay on as an owner after their capital has been paid back? So those 12 different metrics, either one of you or both of you, which ones do you guys tend to focus in on first?
NOI.
okay.
Mm-hmm.
That
Mm-hmm.
is definitely the crucial one.
Yeah. I would agree with that one.
I
And
love it. Go ahead.
And after that, definitely like learning about the market is very important. Population, income, because if people are not, like if it's not showing positive population growth, then that is a very risky situation too. Uh,
I would say the sponsor record as well.
Yep.
And the loan interest. I think loan interest is
Because
Right.
the debt piece is the biggest, because it
Yeah.
can make or break a deal. So
yeah, like even if there's an NOI and if all the numbers looks good, but at the end of the day, you have to look at the loan interest. And if you're just if the NOI is like really great, but with the loan interest and all the stuff, you're not even like having anything in return, that it doesn't really make sense.
Sure. Yep. Absolutely. There are lots of people volunteering, and I definitely get that all of these are important. I'm just eating it up like a subscribe sandwich. Yeah, exactly. That's another thing about why crypto's no good. You can't eat it like a subscribed sandwich. But that's my reminder. It's time to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial deal. And if you're sitting here going like, wow, I'd love to get my hands on one of those, the good news is it's free. You go to dandoesdeals.com. It costs you actually absolutely nothing. And I got to confess, I did something that's really dumb. I didn't even ask for your contact information. That's the cardinal sin of marketing. You never, ever, ever give away your freebie without getting some sort of contact information. But I realize that you, yes, your future in commercial real estate depends on your ability to effectively communicate on the subject of it. And so that's why in every single episode, I go through all 6 sides, explaining what they are. And then I want you to print this out, try practicing and speaking more clearly. And the best part is you'll also know how my guests fit in. When everybody starts, they're basically some sort of repositioner. They are a deal finder. They're an acquisitions person. And then they have to do a whole whack of different paperwork, and they have to look at a whole bunch of different properties. What is this paperwork? Well, the fancy word for it is underwriting the deal. That means they're doing the math. They're doing the arithmetic. They're figuring out, is this property even making the amount of money that the seller/broker is claiming it is? Because but repositioners have plenty of different jobs to do, because I call them repositioners. Some people call these people investors, and these people investors, and these people investors. I call these ones repositioners specifically because they're trying to find upside. They're figuring out, how do I make this building make more money than it is right now? And one thing that's a weird quirk about being a repositioner is you have to have an extensive network of financiers. So that's people who only deal with money and paper. They are not dealing with tenants. They are not dealing with maintenance or any of that sort of thing. They are only in the business of lending money. And the reason why the repositioners need to have this vast network of financiers is because if they can somehow secure a more advantageous loan, as Prateek was mentioning, that goes straight to the profitability of the building. Okay, if you get a cheaper loan, you're making more money. Easy peasy. But that's a little too subtle for some people. So the repositioner next will look at the operations to stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and mowing lawns and collecting rent. Me personally, my contribution to a GP team, especially as it comes to operations, part of it is because of the web application development that I've got all this history in. Then, of course, the CRM management part. But the bigger one, if you really understand this stuff, is you got to understand that vacancy is the enemy in this business. And what that means is, even if you're like me and you focus on buildings with 100 units or more, somebody in the fold has to know marketing, because even if you're outsourcing to a third-party property management, if you've got empty units, somebody has to know how to fill them. And that's where I'm throwing my hat in the ring on my GP teams. But of course, there's only so much you can do with operations to make more profitability. After all, this is a very mature industry. So the next place that the repositioner looks is the contractor team. They get a contractor team involved to do a value add. The idea being, if you upgrade the units, you make them nicer, then the next resident would be happy to pay more than the previous one. But of course, if only it were that simple. The fact is, you can spend endless amounts of money on contractors. You can go ahead and gold plate the toilets, but you're not going to make any money off of it. And that's not the only way to lose money. You can also lose money because they're using substandard parts, or they're dragging their heels and they're taking too long to do it while they're doing other side gigs. So what do? Well, if you're like me, and I don't know if you know this about me or not, but I'm from the internet. So that means I need locals. I need boots on the ground, people who can be there in an hour or two, because if I had to be there as soon as possible, I'd still be stuck at an airport in an hour or two. So that's not going to fly. So every repositioner has to have some local boots on the ground to make it all work. But once the repositioner, let's say it's you are a physician or an engineer or an attorney, something like that, and you get the idea in your head, hey, what if my friends and I pooled $100K each or something like that, and we took over that local apartment complex down the road? Well, the flaw with your plan is when you turn around to the financiers and say, hey, I got this great property. It's 350 units. It's tens of millions of dollars. You want to lend us, I don't know, say tens of millions of dollars? Well, the financier is going to have another question that's going to be burning, and a lot of gurus and mentorship programs, they gloss right over this one, and it drives me nuts. Yeah. They're going to ask, who's your sponsor? Who's the KP? What's that all about? So in my hypothetical, you and your friends would not be eligible for a commercial loan because you need to have somebody in the fold who already owns a similar asset. So if you want to buy a 350 unit apartment complex, somebody has to already own a 350 unit apartment complex, and they have to sign on the loan. That's called the sponsor of the KP. Now, on top of that, you need a certain amount of liquidity, and among the entire GP team, you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you got yourself a commercial real estate deal. So Nilima, Prateek, I understand that you're going to be doing some deal finding, some asset management, and probably a lot of financier relations, but I don't want to put words in your mouth. Where do you guys fit on the die as far as you're concerned?
Yes, so we are focused on investor relationship. Mm-hmm. And that's where our strength come in to fill up that gap in the team to find investors who are actually really willing to invest in that deal. But we also are working as boots on the ground for a team who actually we've been working together who invest in Portland. So that's also we've been also joining them doing what is it called?
Asset management.
Property and then asset management. Yeah, talking with the property manager and then making sure that we're there when they need us.
All right. I love that answer. Fantastic. And that brings me to the buy box. And when real estate people are saying, hey, what you looking for? What's your ideal property? We're really asking about three main things. First one's geography. Where is it? Which state, which county, possibly even which neighborhood? It's definitely going to matter. The second one's size. And when you're talking about size, most of my guests on this show are in multifamily, which is apartment complex investing. And the way you define size in apartment complex investing is by unit count. The reason why it's important is because the type of group that's going to take over 10 unit apartment complexes, they're going to be completely different from the ones who take over 150 and up unit apartment complexes. So that size definitely matters. Other forms of commercial real estate, like some office space or whatever, that would go off of square footage. There are others that go off of unit count, but the size will definitely matter for that reason. But the third thing, I call it desirability. A lot of people call it class. I don't like the word class because it means two completely different things. The first one is condition. The second one is area. And when you're talking about condition, we're talking about how old is the building? How beat up is the building? Is it more or less up to date? And then as far as luxuries and amenities, is it like a really nice place to stay, or is it kind of no frills sort of thing? So that's the condition. But if you're talking about the area, you're talking about a few things. One of them is the school districts where the property is located, because that increases the desirability. The other one would be the crime rate where the property is located, because that would decrease the desirability. But the bigger one I find, there's the common saying in real estate, they say location, location, location. I don't like that saying because I don't think it's clear enough. Personally, I think it should be called traffic, 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 because more people go by a certain location every single day, the more desirable and valuable it'll be. But both the area and the condition are ranked the same way as in grade school, where you got A+ at the top, and then A, and then A- and then B+, and so on. So as far as you and your team guys, what are you looking for? What's easier to say yes to?
We're definitely looking at a property which is, like 1980s or newer.
Earlier, yeah.
Uh, just because with issues and like how beat up the property, the more older it is.
Yeah, we're not looking for too many remodels and like just completely gut out. But yeah, that's why 9080 plus for this size, we definitely want to look something which is 30 units plus,
Mm-hmm.
30, 50, up to 100 plus. And then for area, it's yeah, like you said, it's kind of like a tricky because even in like Portland, because we do also look at in our backyard, but then like even in like Portland, some areas like really really good, but if you like drive maybe like 5 minutes
Few blocks.
from there,
Yep.
it's not. So yeah, I think I like the way you were saying like traffic compared to just location. I think that's what we are at as well. So I would say if you're trying to say the answer from like A to C or B would definitely would be B for area.
Mm-hmm.
Um, and what was the other one? Oh, geography. So Portland, because this is our
Backyard.
backyard market, definitely that one. We're looking at that. We also want to look into Kansas City. And the other market that we're currently looking is Athens, Georgia.
Mm-hmm. I love it. I love it. So then my next question has to do with people. You saw the core competency cube. You see there's 6 different roles in it. Nobody is going to be all 6 roles for any meaningful amount of time. And the result of that is everybody's really eager to introduce you to whichever side you're missing. But at the same time, because of our unique skill sets, we're better off helping some people more than others. Me personally, because I've been in the game for long enough and my skills have to do with the marketing, content, IT, web funnels, blah, 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 blah. The sponsors and KPs are the people who I'm most eager to speak to, just simply because they've got a foundation in real estate that's big enough where a person like me can make a big difference. Whereas when you're first starting up as a local or a repositioner, you need grunts who can put in 80 to 120 hours a week. That's not going to be me. It's not in the cards. So the sponsors and the locals are the people who I'm most eager to speak to because after all, I'm from the internet. But when it comes to you guys, I don't know if you have any 506B deals going on right now. Make sure you don't mention them if you do because that's bad for the SEC. But you can go ahead and say you're looking for financiers, anything like that if you want. But who's in the audience who you can help most?
So we do have a 506C
The offering.
offering.
Yep,
I'm
go
not
ahead.
sure if you're
Mhm.
allowed to say that. I mean, like if
Yeah, you are.
you
Yeah, you're allowed to say it. Yeah.
no, no, no. I mean, in this area. Yeah. So we do have a 506C offering right now. It
Mhm.
is a Class A property.
In
It's
Athens, Georgia.
Mhm.
It is actually a student housing.
Mhm.
108 beds. The reason we're very excited about this property is because it is Class A, meaning like there's low risk, and
Mhm.
it's a really good opportunity for us to go in and raise the rent because the current rent is $400 to $600 less than the market rent. So there's
Mhm.
like huge value add in that sense. And then we're actually buying this property from the builder. So that's why we're able to go in and then just increase the rent and then just like add value to that and then just like, increase the NOI and all that good stuff. So it's
Mhm.
8% cash and cash, 18% IRR, and then
Mhm.
the equity multiple is 2.05. So
Mhm.
if anybody would
Protected.
like to go,
Say
And it's
protected.
a 5 to 6 year hold period.
so yeah,
Right.
if anybody would wanna get more information on that, please do reach out. Um, Besides that, we would definitely wanna just like get in touch with any passive investors if they
Mhm.
want just know about us, our
Mhm.
company, and then we do really, really value our investors. We don't want to just like bring them on to just be like, hey, this is a good deal. When we say it's a good deal, we really mean it, and we do actually like look at our underwriting very
Mhm.
seriously, and then yeah, because we value that relationship for
Yeah.
sure.
And
Great. Great. Mhm.
we're just in the beginning of 2024. So even if you do not qualify as a 506C or accredited investor, we
Yeah.
always are going to have a deal flow where we can always
Mhm.
build a relationship starting right now. And, like when the right opportunity is there, we always have a, like a chance for you guys to invest in those kind of properties as well.
All right, excellent. Now just say projected, please, or else it's a bond and that's illegal. So say projected.
Yeah. It's projected.
Okay, good. Great projections. I love those projected. So if you want to reach out, I'm easy to find because I got this distinct last name. So you can find me on LinkedIn, and it's where I spend most of my social media time. But if you scan this code here, this QR code with your phone, that brings you to the FAQs page of 506 BME, which is where I offer the service of handling your IT for the documentation of your substantive relations. And so that way, if you drop your laptop in the bathtub or something like that, or your house burns down, you're still covered. I got you covered. But if people want to reach out to you guys, LinkedIn, social media, email, phone, website, how should people reach out?
Yeah.
Email is definitely great. So we're definitely big on social media as well. So
yeah. Or you can find me in LinkedIn. My first name Nilima, Nilima. Last name Maharjan, Maharjan. You can also find our company IG. It's Trouvaille Capital, so Trouvaille Capital.
So the word Trouvaille actually means a lucky find. So I'm pretty sure we're definitely going to be a lucky find for you guys. And if you guys want to check out our website, it's Trouvaille. So it's actually Trouvaille. It's a French word, so you actually pronounce it Trouvaille. So it's trouvaillecapital.com.
All right, wonderful. And that brings me to the last thing. It's actually not for you two, it's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs or like the migraine-like symptoms, I'm really confident it's because of the hideous subscribe button that's just right there, and you can get rid of it for free. It costs you nothing. It doesn't, no credit card or any silliness like that. And full disclosure, I want more people to click on it because then YouTube will pay for these videos instead of me. I think that would be amazing. And the trade-off for you is my videos may show up on your list of suggestions, but you can go ahead and ignore those suggestions. Because quite frankly, I really appreciate the fact that you spent this time with me. Just like Nilima, Prateek, it's been great talking to you. This has been great getting to know you a little bit better.
Yeah, thank you for having us.
Thank you for having us, Sam. Nice talking to you.
Yep.
Definitely my pleasure. Hey there, are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506 BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me. Hi. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.